are just moments away from Apple's third quarter earnings. Usually comes at the bottom of the hour. We got 3 minutes. Jonathan Hoenig, Gary Kaltbaum, Jason Rotman are back with us, along with Lance Ulanoff from Mashable. Lance, let me go to you first. 2/3 of Apple earnings come from the iPhone. iPhone sales are down. Some people say they're going to try to make up for the difference by increasing their services and their apps and everything soft. So will software make up for the losses in hardware?
Well, I think services is a really important part of Apple's business, and you hear Tim Cook talking about it increasingly because what you're seeing is sort of this fatigue building in on some of the gadget market, and they're obviously not selling as many iPhones in the U.S., but they've also had headwinds in the international market. But the services business, which has annuities, is growing and growing. So it's a critical part of their business.
But, Jonathan, it's not sexy. You know, when you look at an iPhone, a new iPhone, I mean, the 6S was not... The 6S was not successful. Maybe they'll have more success with the next version. But in fact, this software sex. No, you're misunderstanding, Melissa. It is that sexy.
Fabulous.
The software is what I'm talking about. Software is not sexy, and they're going to try to make up for the loss of iPhone sales, the sexy stuff, with software sales. I don't find that to be interesting. Do you?
Well, David, to your point, I mean, something that was much talked about as an example, the Apple Watch, very sexy, hasn't yet contributed really a dime to Apple's ultimate bottom line. So to your point, they've tried to grow on the gadget side, if you will, the hardware side. The real growth is on the services side, but I just don't think the real growth is in Apple. This stock reminds me, David, very much of Microsoft back in 2001, an old soldier that doesn't die, it just fades away.
Well, Jason, it is 30% off of its high. Do you think it was way overpriced when it was 30% higher? I mean, according to Jonathan, I think the answer is yes, but that's a big drop.
I get called a lunatic for saying kale's my favorite menu item, but nobody says to Jonathan he's crazy for saying that Apple's an old soldier and is going to fade away. Please, listen, you want to know what's sexy about Apple is the $200 billion cash pile that it has. That's the main thing that people need to focus on. Listen, software, iPhones, listen, it's all going to happen just fine, but Apple has the potential over the long term to take over new industries a la self-driving cars. You know, people got rich selling picks and shovels to the gold miners in 1849. Apple can get rich by taking over the auto-driving industry, not by making cars, but by buying software companies that supply that whole industry.
Well,
that's
Gary,
my visionary
Melissa's saying right. I'm wondering if, before we were talking about whether the Fed has lost its way, I'm wondering if Apple has lost its way. This focus on stuff that you can't put your hands on. What do you think about that?
When you have a company that puts out a watch and is not working and is now looking to get into cars, it tells you something about their primary business.
Okay, what does it tell you, Gary?
They're worried about the growth of that.
Is it overvalued or not?
They're worried about the growth of their business, and there's a reason why estimates are for earnings to be down 30% year over year. It's because they're not selling like they used to. It's getting a little bit old, and unless they come out with a category killer, trouble.
The earnings just came out, and I'm seeing a pop after hours. It's selling after hours at over $100. Lance, I understand that their iPhone sales may have recovered a little bit. This is good news for Apple, right?
Well, yeah, of course, because apparently this is all people can focus on is whether or not the iPhone is doing well. And as you've noted, it's a big chunk of their earnings. It's important. But I think that, we know that this time of year is never a super interesting time for earnings, and it's never the biggest pop. I mean, Apple has never really had what people consider a bad quarter.
By the way, let me just be specific here. iPhone sales fell for the second straight quarter, but they fell less than expected. The 15% drop was less than feared. Is that correct, Lance?
Well, that would make sense. I mean, it would make sense that it would slow down a little bit, and people are they're going through this sort of their upgrade cycles, and they're also actually in a weird spot here. The fact that they could have a little bit of recovery during the summer right before the release of an iPhone 7 is actually really
we got
good.
Twitter up on there. Let's put Apple back up and go to Liz MacDonald, who's been following the release. Go ahead, Liz.
Yeah, they have an earnings per share beat at $1.42. Wall Street was expecting $1.39. The revenues are coming in better than expected at 42.46. Wall Street was looking for 42.1. But you're right, it's the second straight drop in iPhone sales, coming in at 40.4 million iPhones sold. That's compared to 47.5 million iPhones sold last quarter. So the quarterly profit did fall 27% overall. That's that bottom line number. You know, analysts have been cutting price targets ahead of the earnings. The shares are down 21% year over year. I'll tell you something. The company still plans to spend $250 billion by March 2018 on dividends and stock buybacks. Their profit is still coming in more than Amazon, Facebook, and Alphabet's Google combined. And their gross margin is still coming in very sweet, coming in around a little bit more than 37%. And I'll tell you something, when you talk about that gross profit margin, that profit margin for Apple, it's equal to a sixth of the S&P 500's profit margin for 2009 and 2015. That's according to Goldman Sachs. So we're going to be watching for China sales as well. The cash pile is still sticking in around $233 billion. That equates to about the size of the GDP of Ireland. Back to you guys.
Well, okay, yeah. It's a 5% jump after hours, just what we expected.